I'm going to show you the place where inflation is running hotter than anywhere else. We had seen over a decade of money printing to such a degree, and then they tried to reverse that, and people aren't having it. Their belief is that easy money is going to come back. It's only a matter of time. So we see speculation, and we can look at this in different markets. I'll be talking about real estate today, and I'll show you some examples of what you need to know. We're also going to look at ketchup. Yes, you heard me right, ketchup. This is what I'm going to talk about in this video as we look at the inflationary aspects that affect you, the individual. Not just on your hamburgers and hot dogs, but of course it affects you in so many different ways. My name is David Quintieri, and I have been looking into this information for well over a decade, trying to bring you the latest and greatest. All you gotta do is subscribe and you know it all. Let's go into it, beginning with this. Canadian banks report 1 in 4 mortgages are 35 years or longer. So we've been told that everything's a-okay, and most people do generally believe that. They think that it's all good as long as you can stretch it out further and further. That's not a good sign, but this is the way it goes. Negative amortization. An amortizing loan is one that's gradually paid off over time, with each payment reducing the balance. Banks in Canada are limited to offering a maximum of 30 years, meaning you have about 30 years to pay off the loan. Make your payments to cover the interest plus some principal, and you get close to zero. Straightforward, right? In circumstances where the payment is insufficient, it begins to accumulate. Rather than getting closer to zero, it increases. That's called negative amortization. Now, you can actually see people that are in these circumstances today. 1 in 4 mortgages at the big 5 banks have 30 years or longer left. Just look at that. Just think about that. Most of these people in these circumstances have amortizations 35 years or longer. They are never going to pay this off. They got their first starter home, maybe it's a condo, and it's going to take them so long to pay off. If they're fortunate enough to live long enough to go into retirement, they're going to still be paying that first home. That's the kind of circumstance that we are seeing today. Unless magically they win the lottery, unless inflation really slows down, unless their wages, triple and quadruple over the next several years, they're going to be paying that starter home off. There is a problem, an affordability crisis that is truly here present in these big cities, whether that is in Canada, as they're showing the example, and I'll give you a couple more from there, Toronto, Vancouver. But just look at cities in the US, look at cities in Europe, around the world. Any major city is basically dealing with the same thing. That's where the jobs are. That's where, the employment is. And yet they've got an affordability problem. So that's one aspect here. Look at this. Canadian mortgage borrowers are fleeing unpredictable variable rates and getting more leverage. Bank of Canada data reveals that nearly 3/4 of mortgages issued in March had fixed rates for 1 to 5 years. Remember, 1 to 5 years. And then see, if people don't know about this, the way it works in Canada and other places is that yes, you can pay that off over that 30-year period. However, you are going to have to essentially refinance or renegotiate after this shorter time period. They don't let you get that rate for the entire timeline. And that could work in your favor if interest rates are going down, but when the interest rates are going up, you get smashed. And that's what people are having right now. 40% of mortgages right now had that super low interest rate that are going to come due in 2024. Doesn't that sound like a very big problem to you? Oh no, but we did the stress test, so we're good. 40% of mortgages are going to have a rate that's like double what they had previously. Look at the payments people are going to have to make. Are they going to be able to afford that? Oh, well, only time will tell. Unless, of course, they start to rapidly decrease mortgage rates. And they have already, many people in the banking industry have been calling for not only just to stop raising, which Bank of Canada has done that, they want that to come down. How many people do you know that are heavily exposed to the rates that we've seen right now. There are so many, let me tell you. They are praying, they are begging that rates go down because they're in some big trouble. And these are the circumstances too many find themselves in. Hey, the bank will let me have that mortgage. I might as well take it. This is extremely dangerous. How many people do you know? Let me know. I'm interested to know in the comments. Canadian mortgage delinquency rate and what it means. First off, let's talk delinquencies, which are greatly misunderstood. Canada's mortgage delinquency rate is the share of total mortgages past due by at least 90 days in Canada. After 90 days is the point at which a lender can take action if the borrower doesn't pursue a remedy, so on and so forth. It works a little bit different than in the United States. When people can't pay, they just can't walk away from their home like they did in 2008 in the United States. Low delinquencies, compared to what we had seen, something of the U.S. When things were happening big time, the numbers are low. Let's be honest. Okay, the numbers are low, but they have picked up to such a degree. And we haven't even seen interest rates rising for most people yet because they're locked in for those few years. A lot of people have on that variable because, hey, if interest rates are constantly falling, variable makes sense. In my opinion, I would never want to accept a variable rate mortgage because I want to be certain of what I'm going to pay month after month for that duration. So if I get that 5-year, I want to know for the next 5 years, this is my price, even if that price is going to be a little bit higher. That's just the way I am. Maybe you're the same. I'd rather have more certainty. In the United States, hey, you can stretch that out for 25 years at that rate. My goodness, that's a great deal. So what's happening here in Canada? You've got inflation. You've got inflation that's in rent, that's in your mortgages. But it's not just there. It affects everybody. But why? Why is this the case? You're talking about it at the dinner table. You're talking about it with your friends. How about your car payments? For so many people out there, they are paying nearly $1,000 a month for their vehicle. When you factor in everything, it's the lease or the financing. You look at the gas, you see the insurance, maintenance. Don't forget maintenance. Things do happen. You get a flat tire and so on. All of these things add up. And you're paying $1,000 a month in so many cases. This is unbelievable. So look at all those cars on the road out there. Every time you're going out there to drive, you're going to see that somebody's driving, a decent vehicle. That person is paying $1,000 a month to move that thing around the road. So just imagine now, they've got $1,000 there. Their mortgage is about to increase potentially. And now you just add these things on top. Food prices are up, energy prices are up, and so on. And so that's what we're dealing with. But there's more. But wait, there's more, right? That's what they say. Florida home prices are holding steady and even rising as people flock south. So Florida has been benefiting over the last couple of years. That is very clear. They have been seeing a lot of businesses move in there from New York and other areas. They're opening up offices. And so they've been doing well. And we could see that there's a lot of development. There's a lot of movement that's happening in general. People and businesses too. So some places may not be as exposed as others. There's a lot going on and I'm just generalizing here, but I'm just trying to show you that so many different places where the jobs are, the prices are just too high. And the intricacies there are quite evident, but when we look at it just at the price action here today, it's not always the same for every place, right? So it depends where you are. This is discussing China, world's largest real estate market on the brink of collapse. Does anybody know? I've done a video about this before. Does anybody know the estimated size of China's real estate market? Can you guess? I'd like to know. You could put that down below, what you think it is, and I'll tell you in a minute here. What is the size in dollars? What is the size of China's real estate market? Please guess, and I'll make sure to reply to you. Hopefully nobody edits. I'll be able to see if you edited that. Let me know, put it in the comments below. What is the size of China's real estate market in dollar terms? Look, I want to show you something what's going on in China, a little bit different than other places. Recent stats from China's central bank show that the home buyers' enthusiasm has fallen drastically despite price cuts, incentives. The world's largest housing market continues to slump. China's banking sector is taking a hit on two fronts. Both defaults and prepayments rise. Meanwhile, China's developers are starting to slow the strain, with the real estate giant Wanda making headlines as the value of its dollar bonds plunge. So they've still got issues. We had Evergrande. Oh, you know how you fix the issue with Evergrande as it's failing, it's actually collapsed? So the thing is just falling and falling and falling. The stock is just going down. It's just straight down. How do they fix that? I know. Let's just take the stock off the market. That's it, done. Is that really the solution? Of course not. So there are many things that are going on here, but they locked down for 3 years. There's certainly overdevelopment at the same time, and the conditions are generally not positive, okay? Slower growth, there's just too much happening all at once. And so developers and the investors are saying, let's just wait. Let's just wait it out. And so just that little bit of waiting, and that kind of stretched out over the last few years, but that created an issue because it's like a Ponzi scheme, okay? They were getting people, get your brother, get your sister, get your coworker, get them all, bring money in, bring money in. And so they tried to get these investors any way they could, doing all these kind of silly things that I've talked about in previous videos that really ended bad, okay? So that's here, that's now. And so in China, what they have to worry about is the fact that this is get it, $62 trillion industry, real estate in China. $62 trillion. Did you know that? I will check the comments and you could tell me if you were right. 62 trillion, that could spiral out of control. Now that's not all the debt and that's not everything, but just understand that when you have the biggest asset in the world, that is Chinese real estate, everything is riding on that. And the banks, from the government, the banks have basically loosened their lending restrictions, the reserve requirements, and they've basically said loan that money out, get it out, and still it's slumping. So think about that. Think about what that means. All right, now let's talk about ketchup. Yeah, I said ketchup. You thought I was kidding. We'll talk about that in a second. Look at this here. It's more expensive to live, and workers are tapping their 401ks for help. People would not be going into their retirement accounts if they didn't absolutely need to. Inflation is taking hold. That's what this is about. Yen weakens past 140 per dollar as traders seize another Fed hike. And the reason I mentioned this, same situation. When you print all this money and you signal that you're going to just continue to print regardless of inflation, the currency will weaken. Look at it. 140 to the dollar. It just keeps getting worse and worse and worse and worse, and everything is priced in dollars. You got to buy that. That just makes things more expensive. You're only making matters worse. Admit the failure, admit the problem, resolve it. It's tough. I know you got to pull that Band-Aid off. It doesn't feel good, but I don't like weakness. I don't want to see that, and I will refuse to deal with that personally. And so when I look at these things, I call that pathetic. I don't care. Deal with your problems. If you've got problems, you deal with them. Don't be weak. Okay? It's not the currency that's weak. Somebody's got to stand up and say that's enough. Check the price tag before grabbing a bottle of ketchup before you're partying. I mean, it is funny, but I mean, it's not really funny, I guess. Check the price tag before grabbing a bottle of ketchup. Yeah, because the price has gone up. And guess what? With all that shrinkflation, you know how it works. They give you less in there. Toilet paper, I mean, just about everything. Everything has gone up considerably. And when they give you an index, it's never even accurate. Okay, of course, they're generalizing some areas less than others and whatever. But let's just be honest. Over the past 3 years, inflation has, the time in between, I would venture a guess, the time in between financial crisis and 2020, inflation was a certain level. But I bet just over the past, let's say 3 years, 2.5 years, inflation has been worse than over that period of time, even though it was much longer. Outraged and furious, Germans rebel against gas boiler ban. Of course, people are going to have to pay more. All right? You want to heat your home? No, you're going to have to pay more. You're going to have to heat your water. It's going to cost you more. This is what they want to do. They want to say, we've got to hit these goals set by the World Economic Forum, by all these supranational entities above our governments. You got to pay more. Inflation coming from one direction or another. You are going to have to learn to live with less because someone dictated that policy to you. You can tell me how this feels. Why don't you share your opinion? Why don't you stop holding that in? And when you come to the Money GPS, you let it all out. You let it all out. Let me know in the comments below. UPS strike looms in world reliant on everything delivered everywhere all the time. That is absolutely true. This is just about the strike, but the point I'm just mentioning here is transportation of all kinds has gone up. We were told, I showed some data that said that transportation costs via truck had declined, like from its peak. I ship a lot of stuff, and whenever I've got to pay for that, it's more expensive. And I'm doing that through different means. And I do use UPS as one of those. It's more expensive. It's gotten worse. It hasn't gotten better. Okay, that's very clear. You tell me where all that good stuff is. Okay, and if you have a variable rate mortgage, watch this video. There's Canadian flags there, but even if you don't have it, I'm gonna pop that up on the screen. If you have a variable rate mortgage or know somebody that does, I specifically talk about how to get that handled, how to get that resolved. Watch this video. I'll see you over there.